Welcome to the StockMentor.com studios here in the beautiful Black Hills of South Dakota. I'm your Stock Mentor Brian Johnson, and I'm making professional trading simple. And another run up by the Bulls. We talked about this yesterday, and the Bulls, each time they try to call a top, get their hands slapped. And it happened again today for anybody that thought they were going to catch the dive. Didn't happen. You got slapped again if you're a bull or a bear. Slapped on the butt maybe if you were a bull. It made you run faster. Because still nothing broken, and I've said it, and I said it yesterday. There's no reason to think we couldn't go higher. Sure enough, there's still no reason to think we can't go higher. There's certainly reason now to be very cautious, just as we have been for quite a while. There's even more reason after today to be cautious, and we're going to get into that right now. So taking a look at the markets, let's one other thing. We talked yesterday about intraday emails, and I was telling you about how I was sending out intraday emails to my subscribers. And here is one from today that I sent to them late in the day. We had that little pullback towards the very end of the day. I had somebody write and ask me, "What do you think? Do you think maybe it could change today? Is it going to be more of the same, what we saw yesterday?" And I wrote this back, and I just said another move down this afternoon, but nothing all that sizable yet. It may do exactly what it did yesterday and move back up before the close. All we were doing was we were just back to the highs that we had just broken. So at this point, it's just a retest of support. And if we hold here for any length of time, we'll rally into the close, but shouldn't have said a rally. That was obviously badder English on my part. If this holds here, golly, look at me, I'm terrible. I really ought to proofread these before I send them out. If this holds here for any length of time, we'll rally into the close, and precisely actually what we got today. So we got a rally into the close. If these are the type of intraday emails that would help you, please sign up for my newsletter. Very simple to do, $15 a month, and certainly not going to break the bank. Once again, something that maybe some of you could have used, especially if you're playing the ETFs. These would have been useful information at the end. And we did. We broke the highs of the day. It came back down, and I don't really have it here, but it broke the highs of the day. It came back down, all in this candle here. And let me show you this. I'll just show you. Okay, so let's have a little fun. So here's the SPX. This is precisely what we were watching today. This is from the beginning of the day, all day long. We're moving up. We're moving up. We have this nice basing action put in here, and all of a sudden, slam, we start to move to the downside. People are asking, is this going to happen? What is it going to be like yesterday? We didn't go anywhere. We moved down. People were asking, well, wow, we're moving down. Well, yeah, we moved down 4 points. We didn't really move anywhere, and we moved right back into previous support. What was resistance? Well, where's that at? Well, let me show you. Voile. It was right there. So we moved up all day, tagged it here, pushed through, flatlined, then fell back down, but we didn't really fall all that far. We fell 4 points, and it came right back down here. See how this tested as resistance, broke through, and I said if it'll hold as support for any length of time, it's going to rally into the close. And we had 1, 2, 3 candles where it held just fine to the dot. Didn't even try to break it. This was perfect example of how resistance became support. It held here 1, 2, 3 candles, and away we went into the close. So just perfectly played out by the markets. This was textbook, absolutely textbook. So let's get back to the regular chart here. So here on a 60-minute, by the end of the day, we ended way up here. It's been a heck of a run up since September 2nd, September 3rd time frame. It's been straight up. We've seen this many times before, like right back here. Ran up, and then it did a little bit of consolidation down, and then a run back up. We're still just doing the same scenario over and over again, guys. We're still in an uptrend. It's confirmed again today. We are still in an uptrend. However, what are we watching for now? Well, let's go back. Here's the NDX. A nice hard run up. Same thing, different day. On a weekly, though, look how we've broken this previous resistance line, and now we're just about to tag the 200. 1693.39 on a weekly for the NDX, for the NASDAQ. So be watching this very closely. It would be hard to think that we wouldn't bounce at least a little bit or pull back a little bit on the first tag of this 200. We have not hit the 200 since October of last year or so. So it's been a long time. See, way back here since we actually hit that July, that's probably August, September time frame when we last came through the 200 on the weekly, and now we're about to tag it again. It would be very bullish if we blasted straight through that line and didn't stop or pause at least a little bit. But something to be watching on the NASDAQ. Now on the SPX, what have we got to look for on the SPX after this major run up? Well, I've been preaching about the 1044 to 1050 area for forever. Look where we ended up today, 1044.14. Right above it is the 1050 area. We're back up and still over this. We're starting to get a little extended on the daily, but more importantly on the weekly, look how we're right at the top of this rising wedge on the weekly and almost to a 50% fib retracement on the SPX. 1053.54 would be a 50% retrace. Would not be surprised to see us maybe tomorrow push up and touch that area or close to that area before maybe retreating a little bit. But be watching this level. That is from the very highs of this whole rally to the very, very lows in March. That is 50% already that we've retraced. So we need to be watching that very closely. So those are ideas. That's why I'm saying, golly, very hard to hold long overnight. Much easier for me to be bearish overnight than it is bullish, even though there's really no reason to be bearish at this point. It just hasn't shown me anything. There hasn't shown me any reason to be bearish. We have things that might make it bearish, but nothing really that's got me sold. Here was the VIX. It was down today a little bit, not too much, but you can see we came back into a double bottoming area on the VIX and bounced back up. VIX from a TA standpoint for me, I don't know. It's kind of hard to call, hey, it's broke this trend line or it hasn't broke that trend line. I don't know how well it really follows technical analysis, but still interesting to see that it did double bottom at this area here. We'll see if that holds. Oops. VIX on a weekly, something a little bit more sinister happening here in the respect that we've broken this trend line here, but now all we've done is move down all week. We've really kind of closed below this first support line here, and almost we have tagged and did sneak below the 200 today. So we've retested it not once but twice, and the more we retest this line, the better chance there is that it'll break it and maybe proceed back down. So this, we'll see, might not hold. If it doesn't, I can't imagine that the VIX won't make it back down into this area, and that could push the SPX. Well, let's see. I mentioned that if a touch of this 200 could get the SPX to about the 1050 area, so we're close there. A touch down here could probably put the SPX up in the 1100 to 1200 range. So be watching that, keeping that in mind for the VIX. Now, this is a weekly, so we don't know. Remember what happened last week? This ran all the way up here, only to, in the last couple days of the week, run all the way back down. So we might see this thing run down tomorrow, only to come all the way back up and put in a hammer candle. Tomorrow. So we just don't know. We'll wait and see. Adobe's had a nice run. I was really kind of bearish on this one to start the week because we were right at a nice resistance area. If the markets moved down, I said we needed to be watching this to the downside. That did not happen. After a couple of days, I said, I could actually get bullish on this stock. If we could get up and over this trend line and above this $33 area, previous resistance here, I think I could get bullish on it. Sure enough, we broke that $33 area today and up 3.72%, or up a buck. Could have made a very nice profit on this over the $33 mark. That was a $1 move today alone. ARO is still struggling with this upper, but for all practical purposes, we are kind of putting in what could be a high base here. Be very careful with this stock at this point. If the markets move up, this could see another retest of this upper trend line. Now, if the market moves down, we could see a break. So I'd say below 41.50 area could be a good defensible short play.